Hello, everybody. I'm your host, Eric Bird, here at StopCirclingNow.com. And today we're going to talk about Redfin. They're giving up the flipping business, ladies and gentlemen. Oh yeah, there's a lot of you out there that thinks when the home prices go down that you're going to have all these hedge fund companies buying up the inventory. Well, I'm going to talk about this. It's not going to happen. Now, I'm not going to say completely zero. There will be hedge funds buying up some cheap properties. That's just the nature of the business. It's called capitalism. But there's an expense involved when you're not able to sell those homes rapidly. And when interest rates are higher, you're not able to sell homes rapidly. Meanwhile, you have holding cost that everybody seems to forget about. And we're going to talk about that and ways that we're going to be making money on both ends of the spectrum regarding buy a home in 2023. That's right, later in 2023, after the second quarter and beyond into 2024. And also stocks when the Federal Reserve starts decreasing the federal rate hike. But we're going to get into the Redfin, so stay tuned and a lot more because we're all about stop struggling now, and I give you ways to make it happen. And welcome. Stop struggling now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. And once again, I want to thank you so much for being here. But please share the videos because you never know who you're going to be able to help. Now, let's get into it because this is how you make money when there's a recession. You plan ahead, ladies and gentlemen. You don't wait till things happen. You do proactive investing. So let's see. Let's go to the Stop Struggling Now YouTube channel page, podcast screen. And once again, notice the join button over here on the right hand side. That's different than the subscribe button. Join button means you become a member of the channel. You give additional financial support. And under the community tab, you receive 1 or 2 videos per month. You are able to join me on live streams Monday, Wednesday, Friday, and any other special live streams we have. You can always come on the screen and talk about anything you would like. You can also tell me, make suggestions about anything you would like to see and discuss. You can also notice that you have emojis, special emojis just for you. And on Wednesday night live stream, only members with the icon. That means you join the channel can be in the chat room. Everybody else can watch on Wednesday night's live stream. Now let's get into the Redfin news, ladies and gentlemen. Here it is. It's big, bold, and straight in your face. Redfin shuts down home flipping business and cuts 13% of its workforce. All right. Remember when I came up with the Eric says, and people were like, wait, what do you mean home prices are going to drop 50 to 60%? No way. Well, ladies and gentlemen, this is why it's going to. There's combinations. Fed is at 7%. Well, they're not really at 7%, but the mortgage rates are at 7%. They're going to rise because in December, they're going to increase the interest rate again, whether it's 0.5 or 0.75. We'll find out a week or so before when Wall Street says we can live with this amount. So most likely it's Christmas time. It'll probably be 0.5. But nonetheless, you increase interest rates, you put more homes on the market. And how do we get here? Just what I keep telling you, ladies and gentlemen. Redfin was buying the homes along with Opendoor and Zillow up until last year. They were buying the homes, paying the extra amount, getting you to bid up more and more for a home. They said, hey, we have free money from our stocks. We have free money that we can borrow. So we're just going to overpay by 30, 40, 50,000 or more. Because we already bought 3 or 4 more homes down the way for 40, 50, 60, $70,000 less. So anything that we do now, that increases the value of the previous home sales that we bought. A win-win as long as you have high demand. What happens when you don't have high demand? Well, you have this, ladies and gentlemen. You have to be the matador, wave the red flag, white flag coming, and all of a sudden you're like, I give up, here's the white flag, because we don't have any buyers. What does that mean? That means things like this, layoffs, 13%, 862 employees are done. Now, that's not the only thing that is discussed in this situation. iBuying dwindling because of the demand dries up and home prices are going down. So they have paid more than what they can even get the house for. They have no choice but to shutter it, and they have no choice but to eat. Even before its overhead expenses, the Redfin Now property segment will lose $22 to $26 million in 2022. Ladies and gentlemen, if they're copping to 22 to 26 million, you best believe it's going to be more than that, because home prices are dropping as we speak. So therefore, their value is lost. They cannot retrieve it. It's not coming back no time soon, and they can't hold it, ladies and gentlemen. Look at this, third quarter. Now, third quarter, ladies and gentlemen, that is, I got to go backwards. December, November, and October is the fourth quarter. August, July, and June, third quarter. That's 18 million already written down off of inventory. You see how this works? Right here, 18 million. They're still talking about 22 to 26 million in 2022. So you're just going to tell me the third quarter they write down 18 and the rest is going to be 4 to 8,000? Highly unlikely. And that's why their stock is being affected right now. And so therefore, now you understand just a little bit on what's happening. Now, Opendoor, look at here. The other culprits, they were all over the East Coast buying up homes, setting their signs in yards, overpaying. And now look, Opendoor posts nearly a 1 billion loss, ladies and gentlemen. Can you believe that? 1 billion with a B. Don't make any mistake about it. How do you make up for these 1 billion losses? You can't, because you can't turn around and buy the homes later. You already bought it top of the market, trying to play the game, which they did good, because there's a lot of you out there who's watching this video who might have bought a home and you were bidding against these people and did not know it. You were like, wait a minute, I gave the guy, he said he wanted 400,000. How come I said 405 and I didn't get the house? Then your realtor says, well, somebody outbid you. Then you say, okay, I can live with 425. Wait, somebody outbid me for that too? Who's outbidding me? What's going on? That should always be full disclosure, but never mind. Anyhow, so sometimes it's Opendoor. Sometimes it's Redfin. Sometimes it's both of them, because they have a inside trader situation, ladies and gentlemen, against you. Don't worry, we're going to get them back. We're going to get them back. Just stay tuned here for another 3-4 minutes, all right? We're going to get them back. Now, think about this. 1 billion. They also have this iBuyer nonsense. Now, reported a net loss of 928 million in the third quarter. See, more than 17 times what it lost in the second quarter. See, $1 billion, ladies and gentlemen. But don't worry, they get to write down $573 against their taxes for the L. All right? But that's not really what the problem is. That's not the problem, ladies and gentlemen. Their revenues are only $3.4 billion. That's the funniest thing right here, because these clowns, They were out here buying about 8,400 homes in the third quarter. Oops. Compared to more than 14,000 the prior period. See, this is what we're saying, ladies and gentlemen. The firm is expecting to sell more homes than it buys, Wheeler said. See, they're going to be selling homes below what they bought them for, meaning 1 billion is going to be lost. Can you believe this, ladies and gentlemen? This is why you're going to have one hell of a ride down if you're going to be in the home buying market. Now, think about this. They're laying off 18%, 500 people, 550 people. That's more people that will not be buying or be in the market to buy a home. And people aren't going to be in the market to buy a home anyhow because the interest rates have increased. The same $500,000 house, you're going to have a household income nearly at $200,000. So that's not enough people when you have millions of homes on the market. And these clowns are going to help us win, ladies and gentlemen. Buy a home 2023 after the second quarter. That's after June, July, August. So starting September, but put in your work now. Study the markets that you want to move to. Make sure you write down the prices, the square foot, price per square foot, so they can't fool you later. Put this in pen, pad, notes, whatever you got to do, because just check 6-8 months from now and you will be very, very happy, and make sure you're getting your credit right on the way down. All right? Just keep that in mind. Now, we're going to go to Zillow. Zillow, everybody knew about a year ago. Zillow said, hey, we're announcing we're no longer buying and reselling homes, trying to flip, right? They had all this extra free cash, right? From stocks, from loans, from just their company making money, and they blew themselves hundreds of millions of dollars because they were trying to get greedy. See, this is a capitalist society, ladies and gentlemen. You just can't do this because eventually you don't have the buyers. Here we are. This is where we're coming in, ladies and gentlemen. This is the moneymaker right here. All right? This is the moneymaker coming up for you. Just keep this in mind. We always have a game plan. Home prices, builders' home prices are down year over year. Now, they're going to uptick. Why? Because they laid off their employees. And what happens when you lay off employees? Well, that is a major expense. That's what happens. You just got rid of that expense. So Wall Street loves chopping expenses, especially when it's you, the human. All right? So they will do that, and that's what's happening. So all of the home builders generally ticked up the last 5 days because everybody's like, oh my God, we have to lay people off. In fact, we're going to write this off on our taxes of all these L's we're taking. And they're like, beautiful. That's what we all like to do at the end of December. But this gives us an open window, ladies and gentlemen. You get an opportunity. Here it is. I'm just going to show you. This is the 6-month chart, negative 49%. So next time, RDFN, put it on your watch list. This could actually go down even further, and you're going to have to watch and make sure they should not go out of business. That should not happen. But you never know. So again, if you're going to invest in any stocks, do your own due diligence. I'm just giving you something to think about. 49% in 6 months. Year over year, which I can't get that actually because I think my internet went out. But it's okay. That's what happens from time to time. So we won't find the over year, but it's probably like 60 to 70%. So pay attention. Look at this. 52-week high, $48, and here it is at $3. Pay attention over the next 3 to 5 to 6 months. You may want to grab yourself something at these low levels because when Chairman Powell and the rest of the Fed about 9 months from now start going, okay, we can start reducing the interest rates. That is when these home builder prices will start going. There's going to be a little lag. So do not be afraid, but just be warned. When they start reducing interest rates, it's going to take them about a year, year and a half to unwind. But when they do, these guys will be right back out here doing their thing. All right? The builders, same with them. We'll get into them as well. They don't get to escape. Here's Opendoor Technologies, 52-week high, $24. Look at this. 52-week low, $1.46. They're down 90% in 1 year, ladies and gentlemen. Just pay attention. I'm not saying buy them right now. All I'm saying is let's find out what happens after they have to write down these hundreds of millions of dollars on the L. And by the way, the holding cost, when they can't sell them, that's costing them millions of dollars because they own thousands of units. That is what people don't understand. If these big BlackRock type companies, these pension funds decide to go all in, these ETFs and REITs, and they say we're just going to buy up all these vacant homes, you have to understand what the fallout is. The holding cost is hell, ladies and gentlemen. The breaking and entering, the thievery from copper or anything of value that's sitting around, people are going to be taking it. This is what happens. And now you're going to have to repair all of this. Never mind, a home sitting by itself is going to deteriorate. You have to always have maintenance and upkeep. So even just 4 or 5 months, a home sitting there with no care whatsoever, there's going to be deterioration. And that costs you more money to sell it because you're going to have to stage it, have to get it up there if you want to get a decent price. So keep that in mind. Here is Zillow. Zillow down 41% this past year. Now, the difference between Zillow and the rest, Zillow said we're stopping buying homes from last November. So this is why they're not down 60, 70, 80, 90%. Otherwise, they would be down 60, 70, 80, 90%. So again, one other thing. They did insider trading that you heard me talk about. Can you imagine? You're going to the website. They have the information. You posted your home for sale for $500,000. You know there's filters on these sites that says, hey, I'm looking for this house, a 4-bedroom, 5-bath, and I'm willing to pay $450,000. And so therefore, what could they do before when they were flipping? They could go find a home that is well below that number, and then they could say, well, we can make $40,000 or $50,000 because we know we have 1,000 people that are looking for this price range and this type of home. So therefore, we'll pump it up. We're the ones offering this. So they get to turn around and sell it to you. So you understand it's manipulation in the background, but really you're thinking, oh, it's a free site where I go find my house. Whenever you're searching, they're intaking the information and using it against you. So this is also another reason why these guys were trying to win. And they were winning until they weren't. But again, that means we win the OCs, ladies and gentlemen. So be ready. Get your credit in order. Get everything in order. And that includes land even. So stay tuned with this because I still have more. It's not over. It's almost over. That's how we're going to win. And we're going to even look at the largest home builder in America, another red flag for the housing market, and that is D.R. Horton. That's right. Buyers canceled nearly 1/3 of all deals. I'll have all these articles down below for you guys, all right? Because I want you guys to understand. Start thinking economically because the future is not guaranteed under any circumstances regarding finances. This country is going in the wrong direction. Let me ask you something. Who pays for all those loans that they can't pay back? Think about it. You, the taxpayer, generally. Who else is going to pay for it? So sooner or later, there's a mountain of debt that is being paid for that wasn't even created by any of the citizens of the U.S. And these guys ran up the prices on homes, do backdoor deals, and then dump off hundreds of billions of dollars at your doorstep and say, hey, who's going to pay this? There's a fallout, all right? So now we have another red flag, and buyers cancel nearly 1/3 of the deals in D.R. Horton's fiscal fourth quarter, up from 19%. Texas-based company said new orders declined 15% to 13,000 homes from a year earlier, down by 10%. So once again, look at this. They're writing off $34 million of deposits and expenses tied to the transactions. and offering more incentives to sellers to close deals. What does that look like? That looks like a realtor coming to you going, hey, now's a great time to buy a house. Don't worry. You should buy this house at this $450,000. It came down 50 G's and you should get in. And the reason why? They're giving the realtor an extra $5,000 to $10,000 if they can get you to buy. See, you guys don't understand. This is not just you walk in and you buy. The realtor sometimes is not on your side, even though that's where they're supposed to be. So you're going to have to think about, what are you doing if you're going to buy a house? Be smart, ladies and gentlemen. So that's what they're going to be out here doing right now, and people are going to fall for it. They're going to overpay for a house even now, thinking, oh, we gave you an extra washer. We gave you a washer and dryer, a fridge, and we gave you some preferred interest rate of 5.34 that's good for a year or two. And we'll pay your HOAs for a year. How about that? Because you don't want to upset the other buyers that bought 7, 8, 9 months ago. So we got to get it close enough to that price that it was before. They won't say that to you, but that's the situation. And that's what this 34 million, ladies and gentlemen, written off D.R. Horton, and they're not the only ones. All right? Just think about this. Mortgage rates are at 7%, as you all know. So that is one last nail in the coffin for the housing market. And Jerome Powell is going to make us all happy. 50, 60% off homes, ladies and gentlemen. If your home, that your dream home was $800,000, you will be able to get it for $400,000. And stop listening to some of these other YouTubers out here. All right? I am a YouTuber too. Do your own due diligence and your own research. Eric says, when you guys are out here next year and in 2024, and the interest rate are 9%, 9.4, 9.5, there's going to be a contingency of people that's going to continue to spread this nonsense, talking about, oh, you shouldn't buy that at that high interest rate, because then there's nothing you can do. You won't be able to refi it. No, see, that's not the situation. The situation is actually reversed. Those people that bought a house for $550,000 and overpaid by 50 grand, and they have a interest rate of 5.7%, they're the ones that are screwed. Because the bottom line is that same house is 300 grand now. But they can't refi because they bought it 550. Even if the prices drop to 50% of their price, they have no way out until the Federal Reserve a year or two from now says we got it back down to 5.5. But even then, you're not going to refi. There's points usually. So now you're sitting there with a house that is 40% lower than what you bought it for, or 50 or 60. You can't refi. You owe more. You're locked. Meanwhile, the person that bought the house for $300,000 and the interest rate is now back down to 5.5, that would indicate home prices are probably 400 G's, 450, 500, but now that person gets to come back and say, give me that loan for 5.5. And now they reduce their mortgage, they reduce their interest, and a lower price. Lower price is what matters, not the interest rate. That will be adjusted. The Federal Reserve works for the top 10 percenters. They want to be able to spur the economy. How do you do that? You increase the value of assets so they can borrow against those assets. Wash, rinse, repeat every 10 to 12 years. And with all that said, ladies and gentlemen, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, But I'm giving you a lifeline. I'm giving you something to think about. Sit around at the dinner table, Thanksgiving, let everybody know what the playbook is. If you want to be wealthy in a short span of time, do what the top 10 percenters do. You buy the asset, and then you say, once it pops up and it goes up to some ungodly amount of price, then you say, thank you very much. Time for me to sell. Give me all of that equity, and then go get yourself some other business items. Do not go buy boats, RVs, motorcycles, travel. You go buy an asset that pays you, a very conservative asset that pays you. No high risk, no high rewards, because remember, a home is a liability unless you rent it out. But why rent it out in this day and age when you could actually take this huge equity in about 4 or 5 years and go put it into some vehicle that's going to give you that 10%, 12%, 8% regulated, all right, license, something easy, not too crazy. And when you have $400,000 or $500,000, you don't mind getting $35,000, $40,000 per month. I mean, per year, annually, while doing nothing, because you made an investment and did something in 2023 and 2024, and here it is 2027 and 2028, and you're like, man, I can't believe my house doubled and a half. I can't believe this. And you could take that equity and make use of it, ladies and gentlemen, for your family. Generational wealth. This is how they do it. If you can get 2 of them, get 2 of them. All right? That's all I'm saying. And with all that said, keep your head up, keep moving, and I'm out.